Can you close a loan when there's a natural disaster? Well, it's never more timely to talk about this topic and a lot more next. Hey there, this is Ryan Skaggs, and this is the Mortgage Minute. Thank you so much for tuning in. This channel is dedicated to everything mortgage, real estate, and interest rates. If you like the content, make sure and hit that like button, hit that subscribe. I'd be forever grateful. And then click that bell icon to be notified as I'm putting out weekly videos on the channel. Now, we're going to talk about interest rates first and foremost. So we're going to begin with those. And it's ugly out there right now. Over the past week, we saw rates move up 0.41, I believe, but the average 30-year fixed at 6.7%, according to Freddie Mac. I'll place a link below. You can actually check out the weekly survey and give you a little sense of 0.4%. So over a third, almost a 0.5% increase in 1 week. That is a big time move week over week. This year in 2022, we saw in late August, we saw a 0.42 increase. This past week, we saw that 0.41. And then kind of June 30th to July 7th, we saw a drop of 0.4. So really from week to week, almost day to day, you're seeing some very, very big increases. The last time that we saw increases like this dates back to October of 2008. And at that time, we saw where we had increases of over a 0.5%. 0.52 was our all-time high over the last 20 years that I was looking at the charts. But then we saw decrease of 0.42, increase of 0.42 the very next week. There was so much unknown during that time. We saw huge swings of volatility. Now, the difference of this market than that market is obviously our housing, our prices, there's never been more equity in homes than there is today. So, people aren't over leveraged. There's not loans going out with no documentation. So drastically different market. But one thing that does very much aligned to that market is the volatility, as we're seeing those ups and downs. And in today's market, we're seeing based on inflation or like core PCE and some of these other things, these headlines, employment data that come out, those are really driving this volatility. So if there's one takeaway is that we're definitely seeing the volatility in the market. So even from a week to week basis, if you're out there looking to purchase, you really need to be getting updates from your lender of where rates are at and understand your buying power and what it does to affect your payment. So let's dive into the topic for today's video, and that is with Hurricane Ian and now Tropical Storm. It is end of September. I thought, why not talk about something like this? What happens? So we're going to give you a few different examples here just to kind of give you that knowledge, is that a lot of times the lenders will proactively come out like we have and already said, time out. We're going to stop closing loans in Florida until we know more of what's going on. And that's absolutely what we did, or my company did, in preparation for this, kind of catastrophic storm. Now, FEMA can go and say, hey, this is now an emergency and deem it in their language. And obviously that would affect lenders at that point. But most lenders, and this is what I want you to take away, are going to understand that a big storm like this is coming and just say, we are not going to fund loans until this is done. So what happens? So in those cases, typically that close date and those items are just pushed out until what they call a 1004D, or a final inspection can be done. And that means the appraiser, sometimes even like management from the lender or something like that, has to go out, drive past the property, and view the property with their own eyes and make sure they have a final inspection report to say that this property is still habitable. It didn't float away, as we're hearing about some homes down in Florida. The roof is still on. And what they're looking for is life and safety issues. Is the power on? Is the house still, and the structure still, in shape? The roof, the this, the that, right? In the Midwest, tornadoes. We have, tornadoes roll through in the summertime, and thus we wouldn't have any, preconceived notion that it's coming, so lenders wouldn't necessarily say, hey, we're going to stop closing loans, but that very next day, they'll typically say, a county, hey, we're going to pause on closing loans in, say, Cook County, Illinois, until we have a better assessment of what happens. And typically it's not a long, period of time, but when I've seen this before, having a license in Florida, 3 to 5 days, and then they'll start to open it back up, but you'll still need that final inspection, so sometimes you can be delayed a few weeks. I'm going to give you another example, and this is a little bit more common, but you're going to purchase a home, and obviously, as you know, I'm in the greater Chicagoland area. Let's say a tree falls on the garage, right? What happens? Well, sometimes what a lender can do is hold money aside for the new buyer if it's not structurally for the home, if there's no, safety issues or something else, is they can hold money aside in like an escrow holdback for these repairs to be done. So let's say that's going to cost $30,000. The seller is going to get their insurance money, put it into escrow. The buyer's going to be able to pull that to be able to, say build a new garage. So each scenario is different depending on what's going on. So it is very unique. But one thing you should know is if there is, say, damage when you walk through on your final closing, your final walkthrough, know that you don't have to close. If there's water damage, there's something else, there are options. It's not the end of the road, but really each one is different. When it comes to the big natural disasters like Hurricane Ian that we're seeing here this week, is that they're going to just pause. They're going to say, nope, we're not closing loans. We're not funding loans here for a few weeks until this storm passes and we can put people, eyes on to be able to see the property. This is the Mortgage Minute. Thank you so much for tuning in. If you have questions, comments, topics you want me to cover in the future, please put in the comments below. Again, I'd be forever grateful for the subscribe. Stay safe, and we'll see each other again very, very soon.